Taking stock of market technicals, we've got an expert, Rick Bensignor, Chief Market Strategist at Execution. He's been waiting for the S&P 500 to cross a special number, 1,111. Let's just call it quadruple one. Rick, good to have you with us. What's so special about this number 1111 on the S&P 500?
It's the top end of the range of where the bulk of volume has come in since the November 2nd low. So we actually put out a piece to clients about a week ago showing where the volume distribution has been since that bottom was made November 2nd. And the highest traded level was 1111. So that's kind of the point of control. As long as it's underneath that, it's not that the bears have control, but the bulls have not regained it.
This is like the borderline, right, almost between two countries.
It's the marginal line.
All right, the marginal line. Yes. All right, there you go. Right, so this is the marginal line that no one wants to cross, at least right now. And you're saying, all right, if we don't cross 1111, because today, what was it, 1109 on the close on the S&P 500. You say if we didn't cross 1111, the bulls not in control, so don't get happy for the rest of the year.
Well, it could do it tomorrow, and it could change things. But until we can get a couple of closes above 1111, we closed 1114 a few days ago, pulled back yesterday. We traded up to 1114, 1115 today, pulled back down again by the close. Until they can get above there and then have a follow-through day to push from what would be a breakout level, the bulls are not in control yet. If they can, we push to 1144-ish. If you get through that, and depending upon how you get through that, then you could possibly push all the way up to 1200. But right now, piece by piece, we're saying 1111 is kind of the key level to look at, and you need multiple daily closes above that level to get the bulls back in control. Right. Otherwise, if you start getting some selling here, and the people who've come in late to the game, kind of people who've done a lot of buying in and around 1100, they've had nothing to show for it for weeks of having purchased. If they start to sell, and you break under 1091, especially if it's this Friday or next Friday you close under 1091, I think you probably go down to 1055, 1045.
All right, so 1091, you got to watch that because there's not a lot of room underneath that until the next step, right? Then we're, what, 1050?
Yeah.
All right, 1050, and you're saying, I like your 1140-ish. That's very good. That's a new technical term.
Ish, right?
Ish, right? No, that's a good technical term, 1140-ish if we break through 1111. Yeah. All right, so bring us up to date, though. All right, we got the little technicals when we talk about the S&P 500. Bring me up to date on a pair trade that you talked about last time you were on the program. You were talking about using two ETFs, and this idea of pair trades is you go long one thing, you buy one thing, and you go short another thing, right?
Right. So the last time we were on, about 2 weeks ago, we suggested buying the REITs through IYR, which is the ETF that's the most liquid to represent real estate investment trusts. That's a piece of the whole financial sector. We thought it would outperform the financial group as a whole, so we bought IYR and recommended shorting
IYF, right?
IYF.
The financials, right. The financial ETF.
The broad financial ETF. In the 2 weeks that we've had this trade on, you're up approximately 10% with no market risk on this. That's how much REITs have outperformed.
You can go home for the whole rest of the year on that kind of trade, right?
It's not a bad trade.
So would you take the trade off? I mean, or are you still, going long the REITs and short the financials?
Yes. Yes.
You think there's more in it?
I think so. Plus, a month ago, we put out long AMD versus short Intel. That trade is up 30% in exactly 4 weeks.
All right, you can take the whole rest of the decade off with that trade. All right, quickly, I'll give you about 10 seconds, though. New trade is what? Going long natural gas and going short what?
Crude oil. We actually think there's a long-term bottom in place for natural gas versus crude oil. This chart looks back several years, and we think this bottom in here made recently, plus the move up, is enough to actually indicate you've got a long-term bottom in. Best way to play that, we recommended buy Chesapeake, sell Hess.
All right. Thanks very much. Rick Bensignor, market strategist, Execution.